Today we are talking about Emcure Pharmaceuticals and their much anticipated IPO backed by Bain Capital. Now if you're interested, stick around till the end of this video to get the full scoop if the company is worth the hype. So what does Emcure Pharmaceuticals do? They develop, manufacture and market a diverse range of pharmaceutical products both in India and internationally. Now their main focus is on chronic and subchronic therapeutic areas. This includes biologics, gynecology, cardiology, anti-infective medicines, vitamins, etc. Now they have an impressive lineup with over 350 brands in their portfolio. And they're not just sticking to one place, they have 13 manufacturing facilities across India and operate in 70 countries worldwide. Now to top it off, they're also supported by 5 R&D centers, which is a huge plus for innovation and staying ahead in the market. Now if you look at where the sales are coming from, about a little over half of their sales are from the Indian market and the other half comes from their global markets. When it comes to their position in the industry, they're ranked as the 13th largest pharmaceutical company in India by domestic sales in fiscal year 24. The global pharmaceutical market has been on the rise. It went from about $1,200 billion in 2018 to $1,494 billion in 2023, which is substantial growth. Now, we saw a big boost in 2021 and 2022, but the growth did slow down a bit in 2023. Now, despite that, the market is expected to keep growing at a rate of 5 to 5.5% per year until 2028. Now coming to the Indian market. Now India makes up about 2 to 3% of the global pharmaceutical market as of 2023. The Indian pharmaceutical formulation market, which includes specific preparations for medicines, is expanding steadily and is expected to grow at a CAGR of 8 to 9% from 2023 to 2029. Now, medicines for long-term conditions like diabetes or heart diseases are expected to grow faster at around 8.5% to 9.5% per year. Medicines for short-term conditions like infections are expected to grow at a rate of 7 to 8% per year. Now, coming to the financials, which paints an interesting pictures. Now, Emcure Pharma saw its revenue from operations grow at a CAGR of around 7% from fiscal year 22 to fiscal year 24. Moreover, while revenue contribution from sales within India was higher in fiscal year 22 and fiscal year 23, fiscal year 24 saw revenue contribution higher from international sales. Now, EBITDA margins declined to 19% on the back of higher expenses due to increase in raw materials, increase in manpower, and capacity addition. Similarly, the bottom line was affected, which saw a reduction over the years and recorded 527 crores in fiscal year 24. However, debt to equity, on the other hand, saw a reduction over the years and stood at 0.67 times. Now, let's look at how Emcure Pharmaceutical compares with some of the other key players in the industry. Now, Emcure is actually one of the smallest players in terms of its revenues when compared to its listed peers. When it comes to profitability, particularly EBITDA margins, Emcure is at around 19% for fiscal year 24, which is on the lower side compared to its peers who have EBITDA margins ranging between 19% to 30%. For return on net worth, which is a measure of how well a company is generating profits from its net assets, Emcure stands at about 16.87%. Again, this is among the lowest compared to its peers, but higher than Cipla. Coming to the valuation bit, at the upper price band of 1,008 per share, the stock is being offered at a price to earnings ratio of 36 times based on its fully diluted EPS for fiscal year 24. Now, the PE ratio is a common valuation metric that shows how much investors are willing to pay per rupee of earnings. The average industry PE stands at a 40.4 times, suggesting a decent valuation for Emcure Pharma. Now, coming to what we like about the business and what we don't. Now, Emcure has established a solid franchise in both its domestic and global markets. This means they have a strong position and reputation in their key therapeutic areas. They also have a proven track record of creating successful brands. In fiscal year 2024, 6 of their brands were among the 300 highest selling in the Indian pharmaceutical market. Now, Emcure also invests heavily in research and development and in maintaining a high quality workforce. Now, this is a long-term investment that supports their innovation and growth. Now, Emcure Pharmaceuticals also has around 13 manufacturing facilities across India. Now, coming to what we don't like. The company operates in a highly regulated industry, both in India and internationally. Now, navigating these challenges can be challenging and costly. Now, Emcure also has secured a very modest revenue growth and profitability has been decreasing as discussed in the financial section. Now, this decline indicates they're making less profits from their operations compared to previous years due to higher expenses. Now, profitability is an area that one must focus on. About half of their revenues also comes from sales outside India. Now, this exposes them to risks like exchange rate fluctuations, geopolitical tensions, export regulations, compliance issues, which could impact their financial performance. If you like what you see, here are some IPO details that you need to keep an eye on. The company aims to raise rupees 1,952 crores, and this IPO is a mix of a fresh issue worth rupees 800 crores and an offer for sale of rupees 1,152 crores. Now, the company plans to use the net proceeds mainly for two things: repaying debts and for general corporate purposes. Now, subscription opens from July 3rd to July 5th, and the allotment will be finalized by July 8th. Now, price between 960 rupees and 1,008 rupees per share, with a minimum lot size of 14 shares. Retail investors will need at least 14,112 rupees to participate. This video is just for educational purposes and does not constitute investment advice. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.